The perfect lot size is the secret to safe and profitable consistent trading. Have you been risking too much and blow your account? Or you've been risking less and your profit stays small? In this video, I'm going to show you how you can find and trade with a perfect right lot size no matter your account, size and type. Remember, you cannot talk of risk without thinking of what lot size. How much am I risking? How much am I to make? So, if you're new to the channel, make sure you subscribe, like, turn on that notification bell as we are going to help you master the trading game. You're probably wondering what is Hash going to lie to us today, that perfect lot sizing. Well, we are going to be practical. First and foremost, we need to know what lot size means. Okay, so this is an amount of an asset being bought or sold in a single transaction. Amount of an asset being sold or bought in a single transaction. We have types of lot sizing here that a person can use, any trader can use. We have what we call a standard lot. That is when a person uses one. That means you've used a standard lot. This one is usually used by people that have capital. Maybe you're using a funded account because it is a bit heavy. Then we have what we call a mini lot, which is 0.10 or 0.1. It is the same thing. That is a mini lot. Then we have a micro lot, which is 0.0, 0.01. Common when you're still new, you're trying to figure out things, you're still fearing to lose money. That is your lot size. Then we have a nano lot, which is 0.001. This is common with synthetic traders. So most of the brokers here that give us CDFs or what you call Forex, they end on a micro lot, which is 0.01. So why am I saying this? These are all lot sizes, but which one is the perfect for my account? What should I use? What am I supposed to use? This video is the answer. First of all, we need to know capital. We had a video about capital. We saw how important capital is. If you haven't watched the video, go and do watch it. So first of all, before you find your lot size, before you ask your mentor, what lot size should I use? First know what is my capital. So let's say I'm going to use this demonstration of $1,000. Okay, so my capital is 1,000. I'm going to find my perfect lot size and how. I'm going to show you both using the phone and the PC. So we are starting with the PC, MT5. So first, capital. After knowing my capital, I need to know my risk tolerance, or I need to know my loss limit for a day or per trade. That means I have to say, or I have to have my plan saying, on my $1,000, I am willing to risk or lose $100 per day, or I am willing to lose $50 per trade or per day. This depends on you. The thing of capital and lot sizing, it should be personal. These questions should not be asked your mentors, because your mentor is not the one giving you the capital. To avoid these things of you putting a trade and run away because it has slightly retraced. You need to find these things personally. That is why you are making this video. So we have $1,000 and we are saying we are willing to risk. If things go wrong, please, we are willing to lose $50. That is about 200,000 Ugandan shillings. So after knowing that, I also need to know what we call pips or points. Remember, I'm assuming you have a strategy, you know how to trade, you get setups. Every trader that has a strategy, at least you know the trades I usually get, I have a stop loss of around 20 pips to maybe 30 pips. Or you can actually say 0 pips, which is not possible. You cannot have a stop loss of 0 pips if you're trading like seriously. So 0 pips, I know, let's say 10 pips to 30 pips. So you need to know my list or your maximum stop loss that you can use. If the structure gives you a stop loss of, now, let's say 40 pips, instead of you reducing the stop loss, now you reduce the lot size. These things interconnect. I don't know if I don't know how I'm going to make you people understand, but if you really understand this video, trust me, you're not going to blow your accounts anymore. So we are on lot sizing. Capital, then you need to know the pips, the distance. How are you going to know all these things? Come on your MT5. Okay? Start and say, okay, if I'm to use 0.01, of course, we know it is the smallest, so it will give you less money. So let's say if I'm to use 0.10, which we said it is our mini lot. How am I going to do this? You're either going to use your demo account, place the trade. Okay, so I've placed a trade of 0.01. Use the broker that you use to measure these things. Don't use any broker you find. Use the broker that you trade with. So after placing my trade on my demo account, I am going to drag and see. You see? So in the process of dragging, they are showing me that, you know what? In, let's say 20 pips. 20 pips are here. In 20 pips on GBP USD, you're going to lose or make $20 if you use 0.0 or 0.10. Okay, so 200 points are equivalent to 20 pips on GBP USD. That's how you calculate pips. That is answered. So you obviously know every time I'll use 0.1, I am going to make or lose $20 in 20 pips. That means if you find that, okay, my TP is, let me get rid of this. My TP is, you see, my TP is 27 pips. That means you've made $27. Now, this eliminates things of, I have entered the trade, but I've actually lost money that I didn't expect to lose. So you start blaming the broker. These brokers are, these brokers are what? No. You have to first prepare your mind. You prepare that, do you know what? If things go wrong, I am willing to lose these $20 because I have done my setup, and this setup of mine is showing me that if this market breaks this point below here, it is not going to go in my direction. So my stop loss is 20 pips. Remember, we are not saying that your stop loss should always be 20 pips. It is the structure that gives you the stop loss. If you see that this time round the structure is telling you use a stop loss of 40 pips, you either leave that trade. Not every trade will be for you. Either leave the trade, or you reduce your lot size so that you lose in case things go wrong. So that in case things go wrong, you lose the money you expect in case things go wrong. Remember we said our loss limit of the day is $50. So we expect to lose $50 even when we increase our stop loss. But now the problem comes. You find a person is trading, the structure is telling him use a stop loss of 40 pips. Instead of leaving the trade, or instead of reducing the lot size and using the stop loss the market has given you, you're going to use the lot size you want and then put a stop loss you want. That is where you find yourself being hit and then the market goes into your direction. I don't know if these things are starting to make sense. So it is very important for you to know what lot size am I going to use. If I use 0.10, I'm going to lose $20 in 20 pips. Every day, every time. That is how it will be. Unless the spreads are increased, sometimes, okay? But under normal circumstances, on GBP USD, using this broker, 20 pips, that is what you're going to make or lose if you use 0.10. So if you see that, me, I'm willing to lose more, because we know the more you risk, the more you gain. The bigger the lot size, the bigger the profits, but also the bigger the losses. So you can say, no, me, I'm willing to lose my $50 and I'm taking one trade every day. If it refuses, no problem. So you can say, okay, this 0.10 is still less. So let me add like a 5, 0.15. We are finding a perfect lot size. So you can execute and count 20 pips. Let's close this one so that you don't get confused. So we count 20 pips down. 20 pips down. 20 pips down. You see, we are still losing about $30. So you can actually use 0.20. You see, I'm finding my lot size. It is personal. Nobody is going to tell you this is what you should use. Okay? It is not a must. It depends on the capital you have. So try this on your PC, drag and see, okay, 20 pips, let me see. 20 pips, I'm willing to lose $50. So you see, this is about 20 pips, you're losing 40, which is okay. You can say, okay, I'm going to use 0.20. If my stop loss is 20 pips, that means I'll lose $40. But if it goes in my direction, same thing, 20 pips, I am going to make $40. That is how you know what you're going to make or lose. So even if this market retraces, a bit, you're not going to be afraid, because you already prepared your mental health, that you know it is possible that if things refuse, I'll lose the $40. So you have to make sure the limit you put, you're okay losing it. Don't just say, me, I'm okay losing $200. But in actual sense, if you lose the money, you feel bad, you cry. You have to put the limit that you're okay losing. Hope I'm clear. So put in the comment, how many accounts have you blown doing such mistakes? Comment. Remember, this year, enough is enough is our theme. That's why we embarked on these educative videos. So if you don't subscribe, you miss. Okay, let's go on. You see, we have used our demo account. Many of you misuse the demos. You're trading them to make money, yet you're not going to get any penny from the demo. Use the demos to find such things. What lot size should I use? So me, I've found that, okay, if I'm using this broker, trading this pair, if I use 0.20 in 10 pips, I am making In 10 pips, I'm making $20. In 50 pips, of course, the money will increase. Besides, here they are showing you this information. Even if when we go to the phone, people that use the phone, let me see, I have my phone here. Okay, people that are going to be using the phone. Okay, let it first load a bit. So my people that are going to be using the phone, it is the same account connected. It is a demo account. Okay, so also go and place a trade. Make sure you're using MetaTrader 5. I don't see why you're still using MT4 in 2025. Why are you using MT4 in 2025? Use MT5. So even on the phone, when you put a trade, you can be able to drag and see. I think these things were introduced on every phone. You see? So they are showing you 373 points. That is over 37 pips. You're going to make $74. If your stop loss is that money, that is what you're going to lose. I think it is making sense now. So that is how you go and arrive on your perfect lot size, using your money, sitting down and calibrating with your money that you have. I have $100. I have $10. I have this amount of money. I'm going to use this kind of lot size. Same with prop farms. I have bought a 5K account. My daily loss is $250. I can use lot 1 if my stop loss is 10 pips, because lot 1 will almost, you lose about $100 plus commission 100, like 10, something like that. And that is how you should go. So if you're there and you've been finding problems, you enter trade, you put very many positions, and then you blow the account, and then the thing goes into your direction. Actually, also, if I continue putting here trades like this of 0.20, this is not now 0.20. You have to add these figures to find the lot size that you've actually used. Okay? So this is not 0.20 now. So you have to add up 0.20 times 1, 2, 3, 4, 5. That is the lot size you've used in total. I think we are clear and we have picked something. Key points to remember: capital, your own capital, will lead you to the lot size you use. And also, your risk tolerance. How much are you willing to lose if things go wrong? You have to be willing to lose something. Forget these things of thinking that you're going to earn every single day. Forget those things. So just imagine you come and make a loss of $50 the first day. You leave the market. Why do you leave the market? Because now you don't want to trade basing on emotions. You don't let the emotions cloud your judgment. Leave the market. Come back the next day. If the next day still you lose $50, you've so far made $100 loss 2 days. But a person that learned, a person that has a strategy, okay? Don't just cry. Keep those screenshots and say, why did I lose this trade? Why did I lose this trade? People keep the screenshots of results instead of keeping screenshots of setups. Keep the screenshots of your setups, so that when things are going wrong, go and review your setups. How did I enter this trade? I used to be fire this week. Why is this week failing? You're going to find that you had started diverting from your criteria, from your strategy. So make sure, keep the screenshots, review them actually every week, every weekend. Review your screenshots. You may not even bother backtesting a lot, as long as you have your screenshots, both winning and losing. Keep all of them. Don't keep only the winning part of the screenshots. So I think I've talked too much, and I think you've enjoyed the video. Lot sizing is very important. Lot sizing is very important. Enough is enough. Quit. Get tired of blowing accounts. Take time, do these things. Nobody is going to do these things for you. Know your lot size that you should use. Now, we are going to make, I'm going to make another video, okay? Actually, these videos are like a series. After the capital, you need to know how much am I going to risk and how much am I going to make. After knowing how much am I going to make, you're going to ask yourself, Hash, am I going to use 0.5 until? No, we have targets. As you have the daily loss limit, we have what we call a profit target, a daily profit target. You can say, I am risking $50, but I want to make $100 a day. A day. You're going to maintain that lot size for maybe a month. A month. These things of using 0.10 today, tomorrow you use lot 1, the other day you use 0.01, that is why you're not consistent. Because your lot size, first of all, is not consistent. So you use 0.50, you lose $200. So tomorrow you come when you're fearing, you use 0.02. When will you make back the $200 that you lost yesterday? When? That means you need very many trades for you to make back the $200. And in the process, you will get exhausted. You're trading, but you're not getting back to break even. That means you didn't understand the concept of lot sizing. So make sure you first keep your lot size consistent for some good time, a month. Make money, withdraw, withdraw some, like how we discussed in the other video. When you see that the month has ended, you've been consistent with your lot size, the next month, the capital has increased, that means you're going to increase a bit your lot size. The target is also going to increase. That is how consistency comes about. Traders, being a consistent trader requires you to do consistent things. These things of changing lot sizes, changing pairs. You're trading like 100 pairs. We are also having a video about pairs. So make sure you don't leave this channel. Watch it like you're watching a movie every day, day in, day out. Otherwise, allow me stop here. Let us meet in the next video. Don't forget to comment, subscribe, turn on that notification bell so that you don't miss out. Also, comment what other problems are you finding as traders so that we can discuss them here. Otherwise, see you in the next one. I'm out.